Today is Tuesday, March 19th of 2024. We did multiple trades in our main option trading account. As you see here, we bought to close the CMI January of 2025 $200 put option for $2.50 per share. So this is the Leaps put option we sold several months back, and we got, if I remember correctly, $8.70 per share. So we were able to pocket over $6 per share on this very safe Leaps option. We had sold the $200 strike price, so way down in here. See, it was way real far of the money. With the recent advance over the past several months since we sold that put option, CMI advanced around 25%, and actually we sold it back in here in December. So we see it had advanced around 23%. It gave a little bit back today, so around 20%. So because we were able to pocket, if I remember correctly, over 75% of the profit in only 3 months, as compared to staying in it for another almost 10 months, this last 250 decided to close it out. So look for another possible stock to sell Leap options in. Next one, we add to our GL cash carry put option position by selling the GL April 19th 105 put option. Got $1.13 per share, a lot less than we got the other day, but I'm still happy with the trade. GL had nice green up volume the past several days. We see it's still honoring this upward sloping trading channel it's been in. If you look here at the bottom right chart, the weekly chart, it's at the bottom of that chart, the bottom of that trading channel. So happy to get that put option sold. The 105 strike price is way down here by the 200 moving average on this weekly time frame. So very comfortable with that. We'll look to hopefully add one more of this, which will put us at a full initial position size. And then we bought to open the CFR April 19th $75 protected put option for 10 cents per share. We'd previously sold, I think it was the, it's either the $100 or $90 cash carry put options, the $100 April cash carry put options. So we simply have an order sitting out there buying these 75 strike price options for protection, and so able to get one. I think we have one more we're trying to get here in CFR. And finally, a new position. This one I've been trading in some other accounts and decided to go ahead and move forward with it on this main option trading account. Kind of supplements our naked call options in SPX. And the way it's structured is as follows. So we bought to open the SPX July 18th, so about 120 days out put option. So we bought the $49.50 put option, sold the same expiration day $4,900 put option, so $50 lower in strike price. And then we sold two of the same expiration day SPX July 18th $4,200 put options and got a nice credit of over $2,150 for this position. So it's a potentially 120-day position, and I want to talk through this with you because there's a lot at risk here. So you really want to understand what you have at risk because you want to define it and you want to have an exit plan in case it goes against you. I do plan to do several of these, and you'll understand why in just a minute. Just keep in mind we're in a bullish spread here. We own the higher strike price put option, the $49.50, and we've sold the $4,900. So we've capped our potential gain here at $50 per share, or $5,000. But then we have additional risk well below that at $4,200 per share. So we see SPX close the day at $51.78. We've sold the $4,200 put option, so about $1,000 out of the money. But we have two of those we've sold, so just understand that. So you see our strike prices here, and of course we have some naked call options in SPX, which we won't talk about those. They are in the money right now. We're looking to adjust those as expiration nears towards the end of April, but for now we're going to leave it alone. We're having nice time value decay, so we're going to leave it alone. This new put option position we sold and bought. So we bought the $49.50, so we own this one here. We sold the $4,900, so we're good there. Where this position might get in trouble is if there's a big decline in the stock market. We're talking a decline all the way down here to this $4,200 strike price. We sold two of those. So getting close to an 18.5%, 19% decline from where it closed today. That's where this position can get in trouble. So because of that, I really encourage you to have a clearly defined exit strategy. Either you plan to take possession of those, which with SPX, you want to actually get the shares. It's a cash settled, so you want to actually get the shares. But my plan here is I plan to do several of these trades, is to actually, if the position gets to a certain loss mark, I'm going to get out. And for me, I plan to, if this position gets to a spot where it's a $5,000 loss, I plan to get out. Now that will most likely only happen if there's a very quick decline, that might happen, or if over time, between now and the next 120 days, SPX works its way down, so this $4,200 strike price is challenged. So my plan here is, if this goes against us, is not to stick with it and adjust like I normally do in cash care put options. The plan is actually to close it out. If we get to a spot where we're at a $5,000 loss. So we've pocketed $2,155 minus commission. And if it gets to a $5,000 loss, I plan to get out of this position. So you want to have a clearly defined plan here if it goes against you. If it goes for you, it's great. And how can it go for us? Well, if it stays right where it's at, it's a win. If it declines anywhere in here, all the way down to 4,200, we get a win. Now, if it goes fast, then the value of these two $4,200 put options that we've sold may go up, so we may be showing a loss there. So that could be a problem. But as long as we don't get a big decline, this should end up being a win for us. So I plan to do several of these to kind of supplement our cash flow against SPX, the naked call options that we've sold. So please understand what you're trading here. This is a big trade. And if the market were to have a flash crash like it did going back in COVID, we see here that it declined really fast. Going back into COVID, it's a very fast decline. Let me get these lines out of the way here. Notice going back into March and April of 2020, it declined 33%. See, that's where this could be a problem, because a 33% decline would be a problem because this is only 20% out of the money, right? This $4,200 put. So just understand what you're trading here. And if you want to go a similar trade but go smaller, you can always look to do a similar trade in XPS, which is 1/10 of XSP, which is 1/10 of SPX. Or if you want to do an ETF, you can do the SPDR, SPY. So any questions, please leave in the comment section on the video or on page, and I'll be glad to answer them. And that's all for today. Hope you have a great evening.